Taiwan is up on your screen. That one is seeing cuts of 0.8%.
The Infosys is now the latest company to make changes to its variable payouts for the first quarter of FY23.
Over 1,000-point decline in the Bank Nifty, which now has the 20-day moving average. If you look at the simple moving average, that's at 37,950. If you're a fan of exponential moving average, that's at 38,050.
They're turning more bearish. They've downgraded all the other 4 remaining overweight stocks within the IT names to neutral now.
The Nifty is opening about 130-point low.
If the US tech space is going to be under pressure, if indices like the Nasdaq are going to be under pressure, it's quite possible that we would probably see some softening or moderation in the valuation.
The stock is up almost 35% in 2022 already. It's up 12% in the month of August alone.
Given the last 2 payroll reports, I think it is very hard for the Fed to walk back and say that the labor market is showing any signs of slowing down.
Our negative volume impact, or in fact our volume growth, was fairly encouraging at 7 to 8% that we had.
We'll be introducing this technology, and it brings down fuel consumption by 35–40%.
Work is progressing on track, and we hope to complete it by September.
Nifty, it is at the day's high. That one is up 70 points.
Good afternoon and welcome to Closing Bell. I'm Anuj, with me Prashant and Nigel, and we are starting the last hour of what's been a very interesting day of trade. Remember, it's expiry week, so the moves at times on both sides can get exaggerated. But what really is the key takeaway of the day for me today is that the Nifty has respected its 20-day exponential moving average. Both simple and exponential moving average actually are almost similar. The low on the Nifty today is 17,345. The 20-day exponential moving average is 7350, simple moving average 17340. So right on dot, that's the level from where the market bounced back. And on the Bank Nifty, it couldn't have been more precise. The low was 37,950. That's where your 20-day exponential moving average is placed. What has helped the market in the last 1 hour is that US futures have recovered and the dollar index has cooled off intraday in the last 1 or 2 hours. So that's obviously helped. But the broader market has been strong through the day today, which is something that the bulls would take heart from. And the big question, of course, is was it a bit of a storm which the bulls have weathered, and is the market ready to move on? A lot, of course, will depend on the global cues. But for today, the market's clearly dodged a bullet. Prashant, Nigel, hi, good afternoon.
Anuj, hi. Nigel, hi. Absolutely. I mean, too early to tell, right, though, whether this is, it's completely dodged the bullet, or is the bullet going to come back and kind of, you got to dodge it again, this time from, behind you.
That movie like Wanted, right? Remember that movie?
I have Matrix in my head.
Okay. Where the bullet used to revolve and come back.
I mean, it's possible, right? I mean, so this is neither here nor there. It's a decent looking screen, but the point is, it doesn't leave you with too much to kind of decide on what next, basically. So globally as well, I mean, the dollar, for example, is not pushing ahead, at least not in today's session. Other things like oil, etc., is no great movement. We'll see what US indices themselves do and the rates market, etc. But there has been no incremental kind of action to support that the market, the equity market here is going to push higher or push lower, at least not yet. So what I've done is I've just picked out a bunch of stocks, both from Nifty and, just the futures and options segment, I mean, where is relative strength at? You can define relative strength on various time frames. What I've basically done is, which are stocks. So the market topped out on a Thursday, right? I mean, the Thursday was the high. And then, of course, Friday, it's a very large candle. The market made a high and then completely collapsed, sold off. Which are stocks which are above where they were as of Thursday's close? I mean, this is very near term, but is that kind of a market? So you've got to take it day on day. And these are the names which come up: Bharti, Mahindra, Coal India, ITC, Aisha, Cipla, Nestle. In the futures and options list, there are names like Tata Communications. These may not be doing very well in today, day on day, that is today over to yesterday, but they're above, last Thursday's close. There is Z, for example. There's a breakout there, which we highlighted last week. Astral Poly, there is RBL Bank, Balrampur Chini, India Cement, and Lupin. I mean, if you're trading very near term, relative strength is the simplest and most effective, one of the most effective things to track. And these are some names which came up on that list. Nigel, hi.
Well, hi. Talking about dodging the bullet and from where it's going to turn up, whether it's Wanted, whether it's Matrix, I think the bulls will like to do it in Rajni style, right? The bullet comes back, bite it, and continue. Let's see whether or not that happens. But for the time being, good recovery from the lows is what you've seen. I told the bulls at the start of today that you'll even be in the green at some point of time. they would be very, very happy given the kind of global cues that we had and risk off overnight. Well, final 60 minutes, that's going to be the test. By the time, let's run you through what all we have lined up on the show for you. The IT pack is the clear underperformer today after Wipro, Infosys, both of them trimmed their average variable payout for employees to 70% for the June quarter owing to margin pressures. Details coming up in just a bit. Mehrabur Irani will be joining to break down the moves in the market today. Not just that, an all-comprehensive check on the technicals of the market, where Jay Bella of Cash the Chaos also lined up on the show. And finally, our alpha manager of the day, Shibani Sirkar Kurian of Kotak Mahindra AMC will be joining in to discuss various themes and stocks as well to remain invested in.
Okay, but first up, as always, we got the last hour calls. The Nifty's, at higher levels seeing some resistance as well. Let's also keep that in mind. While it's taken support at the 20-day moving average, just look at that intraday move. Just bears watching this because these moves are vulnerable to last hour collapses like we saw on Friday, if this is the return of that sort of bear market. But Mitesh, good afternoon. Your thoughts on how the index has moved today from the lows, the kind of move it's made. What does it tell you about the texture and your stock calls?
Good afternoon. So I think the key idea is that one, the 20-day averages come into play and the support levels of 17,400 are kind of holding out. But as I said, I think this move looks like a break from the uptrend, not a big downtrend or a significant decline starting. Now, the first levels were closer to about 17,400. We managed to hold them. There's no guarantee that it will hold on for next few days, but there will be choppiness, and the new high will not be made for a couple of days. So the idea is that wait for this period to play out, try to attempt long near to 17,400. There, I think the risk-reward equation is in your favor. You can keep this stop just below 17,340, which is the 21-day exponential average, and on the upside, try to take profits faster. So you got to be slightly nimble because you are expecting some kind of contraction, a consolidation, which will be, slightly contracting in nature. So with that kind of scenario, buy on decline still remains the strategy because my belief is that the overall trend, the medium-term trend is still on the upside. On the stock side, Balrampur Chini is something which is reversing from the lower levels. That's a buy. Keep a stop below levels of 343 here and a target of around 370 on the upside can be looked at. The other stock which I like is Aditya Birla Fashion. That's also buy. Sorry, keep a stop at about levels of 279 here and a target of around 299 on the upside can be looked at.
Okay, all right. Thanks very much, Mitesh. We'll have you back in 30 minutes to run our viewers through more trades. For now, we got 60 points, 17,555. I mean, actually, even the Nifty IT index has pulled back quite nicely. I think it's in the middle of the range, the day's range. The low on the IT index was 28,714. And we're at 28,932. So almost 50% retracement of the day's fall is what we've seen here. Mehrabun Irani is with us to take some questions. Mehrabun, I mean, IT is a space. Every time you've come on the show, said, well, you've been cautious of the space for a long time now. So well done there. But is it, the big call with IT is if the biggest market is going to slow down meaningfully, then you can imagine much larger downsides. Is that the call, Mehrabun?
I would say that the margins should remain under pressure. I still believe that the story is super. I don't argue with anybody who says the story is not good. The point is at what prices or what valuations are you buying it? And the point is the company goes on saying that, okay, fine, we will have higher and higher volumes, business is happening, deals are happening, but the point is at what valuations do you want to buy IT, considering the fact that the cost pressure is going to continue. The thing is that should I go and buy into IT? I would say that if I wear the blue hat of a trader, I think, well, you can go and buy, because last time also when I mentioned that I don't like IT as a space and I believe that the top has come in January 2022 itself, and then the stocks went up. It was a rally which happened. A lot of people started questioning, hey boss, you were saying the stocks are not going to go up. So this is something which is, I need to clearly state that if I am wearing the blue cap of a trader, I will possibly go and use sharp declines to buy into even IT stocks. But if I'm buying from the longer term angle saying that, oh, the story is good, I would say that I would still sit on the side and wait for better prices to come, because I do believe that the valuations are quite expensive, at least in quite a few mid-cap stocks, where going at 50, 60, 70p, some of them, and people are just chasing it, saying that it's come down by 10, 15, 20% from their highs. This is not the way to look at stocks. When you are buying a stock, you should know that even if it's cooled off from the high, how much it had gone up very sharply in the momentum which we had seen in IT stocks just a couple of quarters ago. So still not very comfortable into buying them from a longer term angle. From the core holding angle, I think another 5-7% off in the frontline IT stocks, I would possibly go and look into them from a longer term holding. But from the mid caps, I think besides maybe something like a Tech Mahindra or something like Emphasis, which business wise looks good, valuation wise, I'm not very uncomfortable now. I think there are not too many stocks I would go and buy into, even despite the fact that last 2-3 days they have come off 5, 7, 8, 10% from the highs.
Okay, all right. By the way, keep an eye out on the bottom of your screen. You're getting some source-based information that's coming in there. 22 companies have participated in Hotel Ashok's monetization roadshow. Remember, this has been a trigger for a while, but the names that are cropping up on the participant list, you have Taj, Leela, Hilton, DLF as well. They could be the probable participants out there. And ITDC, that's the one. Remember, volume's not very high, but that's the one that's reacting positively. So let's see the progress on that front. We'll try to get in Sapna to fill us in on this story that and what all she's picking up out there. Mehboob, any view on this? We've heard about this for the last few years or so. It appears there's finally some progress in terms of the divestment and also the bidding names. You have DLF in there. I think at Indian Hotels as well. That was part of the bidding list. If you could give us a brief take.
No, honestly, I can't comment too much on it, Nigel, being very honest.
Okay, all right. Well, it's not a very highly traded stock as well. So we'll try to get in Sapna to fill us in, more on that. But Mehboob, I wanted your view on a couple of other names there. A couple of stocks that are moving up and about today. You have RBL Bank, IDFC First Bank. Now, both of them, in terms of valuations, they don't get very high valuations out there. But their past quarters numbers, particularly IDFC First Bank, well, the management sounded reasonably optimistic. Any view on some of these names?
I think IDFC First from the level of 34, 35, 33, I think gone up to 45 rupees. So from a trader angle, possibly it could have run out of steam for the time being. But if you ask me to select between the two, and I think 3 out of 3 times I'll mention I prefer IDFC First, IDFC First, IDFC First to RBL Bank. While there are a lot of people whom I discuss stocks with, they are saying that at the present level there's nothing much to lose in RBL Bank. But my comfort level is still not there, despite the fact that the stock would be ruling at a price at which one should be looking at it. So I don't do things, I don't talk on things, or I don't advise anybody anything which I myself am uncomfortable with. So I would say IDFC First if you are a longer term player, despite the fact that the stock has gone up from 34 to the present 44, 45, whatever. I think at the present level you're not going to lose money, you'll make money over the longer term. It's distinctly possible after the run-up which we have seen over the last 1.5 months of nearly 20%, 25% from the recent low. I think there could be some profit booking which could happen. It could consolidate, but ultimately I believe the stock should go up, and I have a lot of faith in the management of IDFC First.
Okay, the market, but by the way, there's a lot of stocks which are making comeback. I mean, so sort of forgotten stocks making comeback. One is TBZ. Just look at that stock, 8.5% higher on that one, and Kalyan Jewellers is the other one. I think, in fact, on Kalyan, we are up 10% now. So both these names are doing quite well. But there are a couple of others as well doing well in trade in terms of the recent, the large volume trades. IDFC First Bank, which is up about 5%. And Suzlon keeps moving higher, 3.5% higher on that stock. Mehboob, good afternoon. I wanted your thoughts on something like an Ashok Leyland. Getting very close to its highs once again on that stock. In fact, this entire auto pack has done well. But view on Leyland?
I would say among all the stocks, I think the frontline four-wheeler companies, I would say that valuation-wise looks the most attractive. So the point is there are reasons why the stock is not getting the right valuation. There are always doubts being expressed. Maybe it is distinctly possible at some stage some money may go out of the best performing stock, which is M&M, which I have a lot of faith in, a lot of confidence in. Only thing is the stock has gone up too sharply, and some money may go into Ashok Leyland. But at the end of it all, I think the story as far as auto goes, I would prefer the auto NCD back on the whole to the OEMs. So the reason is very simple. Most of the stocks have already gone up very sharply, and if one is buying at the present level, it is distinctly possible that if there is a correction in the market, you may get it lower. So after the sharp run up, do I go and buy into an M&M right now, or maybe even an Ashok Leyland right now? My answer is, if I'm a trader, I would possibly avoid. But if I'm wearing the red hat of an investor, I would go in for M&M at number 1, Tata Motors also joint number 1, followed by Ashok Leyland.
You know, another extremely high P multiple stock is Trent. I think Trent had once gotten to 100 times earnings. Just 2 days back, stock was at 1550. It's at about 1350 now. Despite the 2.5% move today. Any thoughts, Mehrabun? One is Trent, and if you want to comment in on PVR, which is also corrected, sharply, very quickly. Yeah.
I would say that Trent, along with many other stocks, I think are great companies. People like to own them. People don't like to sell them off in a hurry. Another name which I would say in passing would be Page Industries. How do you justify buying at the present level? The fact is, the floating stock is just not picking up, and there are new people who are coming and buying the stock, possibly every correction with the stock has. So there are no ways I can possibly defend the valuations of Trent or even a Page Industries at the present level. But despite that, I know that not many investors are going to sell off in a hurry, because those investors are holding the stocks for a very long period of time. Coming to your question on PVR, I've been quite negative on PVR. I think we all know the reaction with the public is giving as far as collections goes to movies. The footfalls are just not happening. The reasons are very simple. I have been watching movies. I am a close watcher. I have been watching movies for the last many years. Let me see. I used to see 1 or 2 movies every week. And I personally believe that, and you can argue with me on this, that 95% of the population of this country is not visiting a movie theater even once in a period of 6 to 9 months. The reason is, how many of us can afford to spend 3,000 to 4,000 rupees with a family of 3 or 4? The balance 5% are going. So you go on increasing the ticket rates just to manage the collections and possibly try to earn something for yourself, but it's just not happening. So it's not a very easy wicket going to be going ahead for PVR. They will have to possibly try and work out on the business model itself. So despite the sharp correction with the stock has seen, because quite a few movies of late have gone down under, I will not be in a hurry to possibly go and buy the stock or ask anybody to possibly look at it favorably. The management may be good, they would be very aggressive with their plans, but at the end of it all, I don't think movies is a place which could be common for most of us. A year later, the OTT platforms have become very common. People are watching movies now on the OTT platform. So movies, spending money, I think that is past it. I think a lot of people were arguing why this movie never did well. Was it because it was boycotted? Answer is no. The point is, people are just not able to afford it. Make the movie, make the ticket 100, 150 rupees, and I promise you the collection will improve.
Absolutely. I think some, initially when the lockdown sort of ended and people had that pent-up demand, maybe they paid. But now I think it's pinching, and maybe not just the movie ticket, the popcorn along with it. I think that is, you go with your family, and if your daughter asks for popcorn, that one you can't say no, right? But at the end of the day, it pinches. You come back and take stock of the situation and say, okay, maybe
difficult, but I eat and go. Maybe, both the kids are dropping things.
Maybe it's better to sort of make an arrangement like we do right now. Make a good arrangement at home for all the kids. It's by rotation, and have a movie and make popcorn at home, and kids are happy. So maybe. But anyway, let's move on then. Nimesh has very interesting sort of details for us, or rather he's doing a very interesting link on some stocks where, because of the recent block deals, this investability has gone up both from MSCI and FTSE. Nimesh has that list. Nimesh?
That's it, Anuj. So, the big theme of the last 10 days has been the large blocks, wherein the promoter entities or the private equity are the big sellers. And because of that, the free float has increased in some stocks. And hence, today is the day when there's going to be rebalancing impact on 3 stocks. First is HDFC AMC. If you remember last week, Aberdeen, which owns 16% stake, they sold 6% stake in HDFC AMC. So the free float has increased in the stock. And hence today, there's going to be so FTSE has increased the investability weight on HDFC AMC, which will lead to a buying of close to 4.5 lakh shares, which is equivalent to 34% of the average daily volumes on HDFC AMC. So that's the first stock which will get impacted because of the rebalancing. The second stock is Sona BLW. Again, there was a large block. A private equity investor sold close to 13.5% stake via block deal last week. Remember, SBI Mutual Fund was the anchor investor. They bought 5% in Sona BLW. But because of the free float increasing, even in Sona BLW, the investability weight has increased, which will lead to a buying of close to 28 lakh shares, which is close to 31% of the average volumes on that particular stock in today's state. So that's the reason why Sona BLW is in focus as well. And the last stock is Zomato. Even there, because Uber sold out its entire 7% stake in the company, the free float has increased, and because of which MSCI has today increased the weight on the stock, which will lead to a buying of close to 7 crore shares, which is equivalent to 21% of the average volume. So these are the three stocks where, because of the free float increasing, both FTSE and MSCI has changed the weightage, which is leading to a bit of buying flows today at close. So that's the reason why all the three stocks will see higher daily volumes in today's trade.
Okay, all right. Nimesh, thanks a lot for joining us. So we keep an eye out on all these stocks. Free float increases means more amount of funds will be allocating money out there. Well, before we slip into a short break, Melbourne, very quickly, PVR you're not sounding too bullish on, but Delta Corp, coincidentally, when you come on air, that stock as well is getting a little bit excited. It's moved to the high point of the day at around 210. It's recovered considerably actually from around that 170 rupee odd mark. At 210, you reiterate your buy stance on it?
I love what you said. I think possibly that they should be paying me some royalty as to whenever you are there, the stock price goes up, the market cap goes up. But jokes apart, I think at the price of 200, 201, 202, I think certainly I would remain invested in the stock and possibly look at fresh buying also somewhere. The thing is that there are developments happening at Delta Corp. We all know about it. And I think since I'm not privy to actually what is happening, and there is a gaming company Hive which is going to happen, at what price will it happen, and what will happen to Delta Corp shareholders, and how much money exactly Delta Corp will get for that, which they will use it for the Goa Convention Center, which they are setting up a real lovely amusement park, I'm told. For land base they're already owning. So there are great developments going to happen at Delta, but because I'm still not privy to it, because I don't know the details as of now, I think it's not fair on my part to possibly offer any more comment besides stating that I've been holding Delta for the last 20 years and I have no intention to sell it, and if somewhere the stock corrects, I will be a buyer into it, and that is exactly what I did when the stock had come down 20-25 rupees from the present level. Okay, well, of course, it's out of F&O ban as well today, so that sort of helped today. Just keep an eye on the Nifty, because, if you look at the if you're a fan of the pivots, then the pivot on the Nifty is at 17,550. That rally is showing just a bit of a sign of fatigue, and if it dips below 17,550, I think things could get really interesting, because the market has of late become vulnerable to last hour collapses, like it used to happen in March, April. So in that sense, I just feel, if you could see the tick by tick data on the Nifty, you would notice that from the highs of 17,594. Which is when we started the show at 2:30. We are now at 17,546, 17,545 thereabout. I think we have a slight bit of delay in that rate on the Nifty. So just keep an eye on that. But let's address that story that we were breaking on ITDC. Sapna is joining us with more details. Sapna?
Hi. So what we are given to understand is around 22 odd companies have actually already participated in the Hotel Ashok monetization roadshow. This was just held yesterday in the evening. Among those 22 entities, we are given to understand that some of the top names at least are there. For example, Taj, Leela, Hilton, Andaz, JLL, DLF are among some of the participants. Also, the common ask from the industry so far is that the single monetization bid for Ashok, along with the land parcel, is the common ask. Basically, the earlier consultant had suggested that Hotel Ashok can be done separately and the commercial land surrounding that can be done separately. But most of the potential bidders have sought a common monetization bid, and obviously under that, if that goes through, then the lease tenure will also be lower. For Hotel Ashok, the suggestion was 60 odd years, and for the land parcel, it was around 99 odd years. So we have been told 99 odd years is almost like a sale, right? And this is not a sale, transaction. It's monetization. So that's what it looks like as of now. This is one big ask that has come through. Also, bidders to be allowed construction as per Ashok's lease conditions, terms and conditions of the the least. Construction may cover service apartments, convention centers. I think this is going to be a boost for the potential parties which are showing interest as of now. Also, we are given to understand that the government could be open to JVs, PE investors partnering with real estate players. So I think that again will be a further relaxation in terms of bringing in as many potential interested parties as possible. Obviously, as part of the process, now that the inputs have come in from the first round of roadshows, this will go to the core group of disinvestment headed by the Cabinet Secretary as part of the process. Once that's approved, then the government will be able to go on to the next stage most likely, and that would be basically actually inviting EOIs. So that's where it stands. But government at the moment is appearing to be very confident. They're happy that so many interested parties have come forward. It remains to be seen how many of them will actually remain in the fray. And last point, Oberoi apparently has not bid. ITC is something that we have to check further, whether they were part of the roadshow.
That's a prized asset right in the center of Delhi, 12, 13 acres of prime property and of course, one of the oldest landmarks in Delhi. So ITDC there with at about 404. It popped up. It's giving back some of those gains. We'll take a very quick break here. We'll come back and we'll have Jai Bala joining us. And also, we'll have Shibani Sarkar Kurian of Kotak Mahindra AMC joining in on some of the key themes to discuss and what she's doing out there in the market. Okay, welcome back. So the market's holding on. I think it'll be instructive to listen to some technical analysis now to kind of decipher what happens next, because we are talking about very sharp price action both on the way up earlier till last Thursday and then a very sharp sell-off over the previous 2 days, Friday and then yesterday. Jai Bala of CashTheChaos.com is joining us. Jai, tell us, how are you reading first the correction and the price action that we are seeing today? What should one go with?
Yeah, thanks for having me on the show, Prashant. Before I come to the Nifty, it's very important to touch upon the currency markets. I'll just take 10 seconds. The euro and sterling have gone below the July low. So basically, people who've been talking about a resumption of a weak dollar, that's been cold water has been poured into that, and gold is holding up above the July lows. So basically, there is a possibility of a risk-off event. That's the signal so far from the market. So coming to the Nifty, there are multiple possibilities at the moment, but I'm leaning towards the possibility that we're going to see at least a move towards the 17K mark for Nifty that confuses, or probably slightly below that, that confuses both the shorters and the long players on the market, and then a recovery to a fresh swing high. But we'll decide what the market is going to do when the markets come closer to 17K mark, and if need be, we can change our position. So look for short-term lower lows for the markets to come through, and the markets that holds below 17,700 to 17,860, that's a sign that this move is actually the dominant play that's going to play out.
Okay, Jay, good afternoon. What about the Bank Nifty? Because that was sort of leading the market on the way up and has led the market on the way down as well.
Yeah, there is still strength in SBI, Anuj. I think SBI as well as ICICI, they seems to have unfinished move to the upside. So I'm a little more confident on SBI than ICICI, but probably we're going to get fresh 52-week highs while the rest of the banking space lag behind and do not give too much headroom for the banking index. The resistance for the banking index is about 39,600 to 41,000. So within this mark, this higher high for SBI and possibly ICICI could play out, keeping the rest of the frontline names in the banking space slightly as laggards.
All right. Hi, Jay. What about the IT index? The problem is that fundamentally everyone has a divergent view. How is the index shaping up on the charts? Do you think we are bottomed out? Do you think that, in fact, there is a case that we could see a further decline from here?
Yeah, the IT index is the only index that went below its June lows as far as the Indian markets are concerned. But, the structure is such that the medium term is still bullish. But in the short term, we need the market is playing out a very complex structure. So a little bit, that's the reason why you're seeing a chop between 30,500 and 25K. So that is probably playing out. It can accommodate one more lower low below the July low, but we are still working with the thesis that from a medium-term perspective, the Nifty IT index will hold about 24,400, and that will be bullish turn for the market, probably below the July lows. Once we have a slight low below the July low, the weakness is coming from possibly TCS. That's got unfinished downsides for the stock.
Autos and FMCG also, Jay? I mean, things are looking a little exhausted?
Yeah, that's right. Even I pointed this out last week, Prashant. There is fatigue creeping in the FMCG space. I had pointed out several weeks ago, watch for the 2413 number on HUL. That's going to be very key. And I think there is a possibility that's going to probably play out this week. But, a little more further lower lows needs to be completed for the stock. And watch out on ITC too. ITC is also looking a little bit fatigued. But as long as it's about 303, 301, you can be on the edge, but definitely no fresh longs here.
Okay, any sort of trades in the futures and options space, Jay, in terms of individual stocks that you may recommend, long or short?
Yeah, I have two short ideas, Anuj, and it needs to be played really carefully. Don't get too aggressive, because there is this move is a little bit volatile, and there's a possibility of markets getting chopped on both sides. So try to keep the risk lower and have that in mind, and keep these two picks. Play that with that in mind. Shorting opportunity in Hindustan Unilever with a stop about 27.15, the 24.13 level that I spoke just now. There's a potential that this stock is going to hit that level. So try to pick up a just out of the money put, or if you're long in the stock, use a covered call strategy or something like that. And the other one is short on Tata Power. Tata Power has failed just under the 50% retracement mark of about 245, and it's looking like it's starting its next leg lower, probably hitting somewhere below 200, roughly 195. So once again, try to play it very gingerly. Use a put position or a covered call strategy.
Jay, very briefly, you said most likely the Nifty goes to 17 or slightly under, and then makes a new swing high, goes back to the swing high of 17,800 or so. But what is the larger view after that? I mean, this is 4-5%, right? Is there a bigger view?
Yeah, definitely. The medium-term picture is that, Prashant, the markets get somewhere close to the record highs or slightly exceeds, and then misleads the whole market into believing that the bull run is continuing. The larger picture has slightly changed. Keeping from November 2021, we're still unfinished with the downsides for the market. So basically, the markets needs to go below the June low. So we are just looking at the possibility of the market going above the August highs and then coming down to fresh lows. Whether that high is going to clock a trap.
Okay, I think we have lost Jay, but we got the point that Jay was making. Just look at the Nifty's intraday chart, by the way. That's the point I was making, that that pivot is important level to watch. And the Nifty has this habit of seeing some bit of last hour decline. So now at 17,533, I think it's more sort of visible in candlestick. If you look at the candlestick of the Nifty, and the Nifty futures premium as well, all of a sudden has shrunk quite a bit. In fact, there's a much bigger red bar on the Nifty futures. The last red bar on the Nifty futures has taken it from 17,567 to 17,527. Yeah, this is the graphic that I wanted to show. So just keep an eye, because all of a sudden you're not confident keeping any longs in last hour in this kind of a market. Our alpha manager for the day is joining us. Shibani Sarkar-Kurian is Senior Executive Vice President and Head of Equity Research at Kotak Mahindra AMC. Shibani, hi, good afternoon. Thanks for joining us. Now that the earnings season is over, what's been your key takeaway, and what's your call on the market now?
Hi, good afternoon. So firstly, talking about the earnings season that has gone by. So overall, the numbers were fairly decent, if one must say so. However, the miss at an aggregate level has been largely because of higher than expected contraction in terms of margins. So the margin pressure has clearly been visible in the first quarter, and maybe some of that will flow through into the second quarter as well. But the good news is that commodity costs have also come off, and therefore second half of the year should see better outcomes for margins as a whole. So on the aggregate, if you look at for the Nifty, the downgrades have started. However, the downgrades were not significant. So in the range of maybe 3 to 4% in terms of Nifty earnings for FY23. So earnings growth, if you look at the range of beats and misses across stocks, that was fairly large. The way we are looking at markets today is that, especially over the last 1 to 1.5 months, we've seen a significant up move in the market. That has been led by three key things. One, of course, some amount of FII flows coming back. Secondly, expectations that margins start bottoming out in Q2, especially given the kind of trajectory on commodity price. And third, India growth looks fairly robust on a relative basis. However, one must also remember that in the near term, given the fact that we've seen this up move, valuations both on an absolute as well as relative basis are now looking somewhat stretched. Especially India's relative valuation in the emerging market context has gone back to all-time highs in terms of the premium that India trades at. And therefore, near term, one could see some degree of either consolidation or volatility. In the medium term, especially second half of the year, if the commodity prices remain stable or come down from current levels, India's earnings growth trajectory, especially into FY24, should revert back to mid-teens kind of a number, which is a fairly decent number in the global context. Now, the way we have approached markets this year has been bottom-up, and that approach continues at this point in time.
Got that. Shivani, hi. Good afternoon. You said for FY23, Nifty earnings estimate, according to you, is, did you put a number there?
No, so we've not put a number as such, but what we have seen is if you look at consensus, post the first quarter, we've seen a cut in terms of consensus numbers to the tune of about 3 to 4%. Most of the cut has come from a few sectors, which includes IT, pharma, and to some extent commodities. While if you look at sectors such as financials, for example, financial earnings growth was fairly strong, and we've seen earnings growth largely being supported by the sectors such as industrials, financials, even going into FY24. So that's how the earnings season has panned out.
Sounding cautious. I mean, we had Nilesh also with us earlier. I mean, there is, you guys are a little cautious, right? Given the valuations that you explained.
Yes, so that's what we are really saying, that the move in the market in the last 1.5 months has been pretty sharp. Now, while the medium-term outlook remains fairly strong because India's growth in the relative context, especially where emerging markets and global context goes, remains fairly robust. But near-term, slightly cautious given the fact that valuations now, especially on a relative basis, are back to all-time high levels of India's premium valuations to the emerging markets, and that's what the near-term view comes through. Medium term, especially in the second half of the year, we believe that the focus for Indian markets will shift away from inflation, closer towards growth, and that's where India is an outlier. But this market this year will continue to remain fairly bottom-up in nature. So that's how we are really approaching the market, rather than being very broad-based in terms of how we are looking at the market.
All right, hi Shivani. Bottom up, there are plenty of opportunities out there, I'm guessing. And these new age themes, they caught everyone's imagination. The street was abuzz when the markets were zooming. Some of the stocks, they corrected to half of what they were. Some of them are a third of what they were. A couple of names like a Zomato, after correcting, the stock is up close to around 50% or thereabouts. Are you looking at some of these new age themes, or do you believe there are better opportunities in the market that you'll rather focus on?
So if you look at, Nigel, hi, good afternoon. If you look at the way we have looked at sectors, there are 3 or 4 key sectors where we have been fairly positive, and this has been our view for a while now. First and foremost, we have played the manufacturing industrial theme in our portfolio, and that is a theme in terms of the growth outlook as well as the trajectory of policy push. We believe that that theme continues to play out. The second has been banks and financials. Again, we have started seeing signs of credit growth pick up and it becoming more broad-based. Valuations in this segment look fairly attractive, and we're looking at names which have strong capital, strong return ratios, and valuations being reasonable. The third aspect that we've looked at has been the auto segment, and that's a segment especially in the passenger vehicle space where we have been positive. And fourth has been real estate and home building, where again we believe that growth trajectory remains more structural. Now, coming specifically to your question in terms of some of the new age companies, we have been even last year cautious in terms of how we've approached the companies. What we have done is that we've looked at each company on the basis of 2-3 key parameters. One, the competitive positioning of the companies in the segment that they operate in. Second is how easy is it for incremental competition to come in and what is the moat that the company has. And the third and most importantly has been capital allocation policies of the company. And therefore, while we would look at some of these new age companies in terms of the current valuations, we would still be fairly selective in terms of the stocks that we pick in the segment.
Okay, you spoke about home building as a theme. Within that, would cement also be included, because that's also seen some bit of life of late?
Yes, so cement has been a sector where we've been positive on. Of course, the sector has seen a fairly sharp impact because of higher input costs, and that has played out in terms of margins. Also, we are now in the monsoon season, which means that pricing has been fairly muted. But what we believe is that cement remains a proxy play to infrastructure as well as real estate. The second factor is that the sector itself has seen fair degree of consolidation. We believe that players, unlike fears that there would be a lot of pricing-led market share moves, but we believe that players would by and large be rational in terms of how they approach pricing. So that's our overall thesis on the sector. Also, if you look at the quarterly numbers, volume growth has been fairly stable and has actually surprised on the upside. And therefore, we believe that going ahead, there should be some amount of demand recovery led by housing, which leads to improvement in terms of utilization. And as that continues to play out, we also believe that pricing should remain stable and input costs coming down would help in terms of margins. And finally, of course, valuations are fairly attractive in the space.
All right, Shivani, we'll leave it there today. Thanks a lot for joining us. That's the word from Kotak AMC. The market, by the way, is attempting another sort of move up, and this time it's been led by the Bank Nifty. Just look at the Bank Nifty. It's seeing a bit of a surge now. Almost 1% move happening on the Bank Nifty. That's moved to high point of the day, and a lot of individual names doing well. Kotak Mahindra Bank in particular stands out. We'll take a break. Up next, we'll connect with Nimesh on the dealing room check, D-Street chatter, and of course BTST calls also lined up with Mitesh. Welcome back. The market right now is inching up once again, as we discussed, especially on the financials. Let's go across to Nimesh then for D-Street chatter. Nimesh, tell us what you picked up.
Hi, Nanjan. I guess it's a day of consolidation after 2 days of aggressive selling. Unlike yesterday, when I said there is no panic selling, even though the Nifty was down to 200 odd points, today the feedback is the larger institutions are better sellers. So while the markets are up, the Nifty is up 50, 70 odd points, but there is no big buying support from the larger institutions. That's the overall feedback. I guess in the near term, I think the global macros is going to take a center stage again. So that's going to have a big impact on the Indian markets as well. Technically, 17,400 seems to be a big support level to watch out. But I guess the big unwinding may happen only if the Nifty breaks 17,200 on the downside. So that's the overall feedback from a technical point of view. Even the Nifty Bank, which is up close to 1% in today's trade, but the overall feedback is the flows are quite mixed. In fact, negative flows in the large private banks. It's a bit of a surprise move in the smaller private banks in today's trade, but at least from a flow point of view, there was selling pressure in the larger private banks is the overall feedback. So, day of consolidation after 2 days of brutal sell-off. I guess from a Qs point of view, FN expiry and the global Qs are going to be very important, at least in the short term.
Okay, all right. Nimesh, a few more stocks though that you're tracking?
So in terms of individual names, the first stock is Dixon Technologies. For the last couple of days, the consistent feedback is there is some bit of buying back in this particular stock, especially one of the global, European funds seems to be quite active buyer in Dixon Technologies. So maybe a bit of support around these levels from larger FIs. So that's the first one. The second stock is NIT Limited. After a very, very long time, a feedback on this particular stock of a potential buying interest from a larger FI. So the delivery volumes are going to be quite high in NIT Limited today on the back of buy flows at an FI desk. So that's the second one. And the last stock is Bharti Airtel. Again, quietly that stock is moving up, buzzing in trade in today's trade as well. But the feedback is maybe some large investors are sounded off. So a large potential block is going to come soon in Bharti Airtel. So that's something to watch out in days to come. But in today's trade, I guess it's buzzing largely on back of buy flows.
Okay, all right, Nimesh, thanks very much. Interesting list of stocks as always to track. 80 points on the Nifty with 15 minutes to go for close. Mitesh is with us to tell us, his trading idea near term, what to buy or sell today for a reverse trade when we come back tomorrow. Mitesh, over to you.
Yeah. So I think, I have Cholamandalam Finance as one of the calls, can be taken on the long side. That's something which is reversing very nicely after a few days of pullback, and very strong price and volume candle here. That's the BTST, which is top at 779 for a target of 800 to about 805. And the other one is Coromandel Fertilizers. That's also reversing from extremely oversold levels, and that's the BTST. Keep a stop below 1035 and a target of around 1065 on the upside can be.
Okay, fair enough, Mitesh. Thanks for those calls. Let's now invite our next guest. Anand Tandon is joining us on the show. Anand, hi, good afternoon. Thanks for joining us. I wanted your thoughts first on the IT stocks, Anand, because that's where the big debate is about, where they're headed from here, especially in terms of valuation. Your thoughts?
Well, Anuj, I actually maintain that these are small blips. Yes, there will be a question of margin pressure in the near term, maybe because of many of the companies have also increased the bench size quite significantly. And if there is any kind of slowdown, obviously it will percolate. But overall, I think, if you were not to buy IT or not have it as an equal weight in your portfolio, where would you allocate it? The only other segments that are likely to do well are, of course, the engineering and capital goods segment in India, and perhaps the public sector banks. And after that, everything else is tactical. So, you mentioned, for example, consumer finance. Now we are getting into the season where consumer finance in the next quarter will probably be picking up. But on an overall annual basis, it is not going to, that is where most of the growth is going to come from. So if you were to look at building a portfolio, I think you would still, at least I would still be kind of equal weight on IT. There is no question that you are not going to get the same kind of performance as you got over the last few months.
Okay, all right. Hi, Anand. I'm not sure whether you track these names. Some of these rice-related stocks, LT Foods, Dawat that is, that spiked to the high point of the day. KRBL as well, the management has been sketchy in the past, but that one as well is doing pretty well. Any view on either of them, KRBL or LT Foods?
Well, most of the rice-related stuff really depends on the inventory you have. So, it's a little difficult unless you're tracking the inventory on a regular basis. As you're probably aware, the inventory value is what, you have to kind of, especially if it is basmati, you have to actually let it age. It's like wine. And then it depends on the kind of contracts that the companies have, and that is not easily revealed. So on an overall basis, if you have some understanding of where the inventory and contracts are, then you could perhaps buy them. I think they are too specific for a general portfolio to be looking at.
Okay, all right. What about tire-related stocks? Everyone's been focusing on the OEM. Some of these, auto ancillaries have been doing well. I think JK Tires, if I'm not mistaken, the stock was up 6-7% odd. As we speak, I think it's moved to the high point of the day. Rubber prices as well are cooling off. Anand, any view on some of these names?
Well, they are relatively cheaper compared to many of the other auto ancillaries. But I think if you were to look at a sustainable basis, this rubber price business again is a commodity price which you have to keep on tracking. And that always puts a kind of cap on where the tire stocks can go. The other problem has always been China, and of course to some extent that is now lower because of anti-dumping and so on. But even then, somehow that is not a sector that has given you consistent performance bar a couple of companies. So if you are looking at auto ancillary space, my own preference would be to look for those which are going to be supplying to EV companies globally. And, there are quite a few companies there that could be fairly interesting, not necessarily just the commodity-based kind of stuff.
Okay, Nifty, by the way, just scored a century intraday. If you look at the chart, there's clearly a bit of a surge which is on right now. SBI is the one which has led the last bit of move on the upside, along with ITC. ICICI Bank also doing quite well. So a lot of these names doing well. Anand, the word on SBI?
Well, it remains both the stocks that you mentioned, Anuj, SBI and ITC are a couple of my favorites. I think SBI has to be the key leader in terms of one of the largest contributor to the earnings for the current year. And I don't see any reason why even now it's not particularly expensive even now compared to the private sector. Among the public sector, there is no question it's the best company even in terms of its management capabilities and so on. Same goes for ITC. I think it's still relatively cheap among most of the FMCG players, has the best protected earnings growth possible. So again, both are good stocks to be looking at.
Okay, Anand, stay with us. We'll take a quick break here and come right back to you. 100 points, three-digit gains on the index. 17,591 is where we are at. See you on the other side with more specific stock talk.
Well, the Nifty is hitting it out of the park, actually. It appears that some shorts are getting squeezed on the wrong side. We're up close to under 120 points out. And we pull up the intraday chart, you'll see that final 20-25 points came in a bit of a jiffy out there. The IT index, in fact, has cut some of its losses, so that's what's helped out as well. And Tata Motors, well, that's moved to the high point of the day. So pretty good news on that front as well. But a good time to get you some market opinion. Earlier today, we spoke to Nilesh Shah of Envision. He believes that the broader markets are still in a bull phase. Sectorally, he remains bullish on banks and defense stocks. Let's hear out what he had to tell us.
What we're really seeing is that a lot of stocks, a lot of sectors, especially in the broader market, are actually in a very strong bull market. And that's really where the opportunity is for India and investing into India. And tier 2 banks, the auto component space, the capex plays, and defense. These are some really very interesting opportunities, and I clearly believe that sectors like these are going to be in a very strong uptrend and in a very strong bull market. There's already been a significant price erosion. A lot of the froth which has been there is clearly gone. You have two sets of components or players in the IT services space. One are really the big boys, the large guys, the top 3, 4, 5 names. I believe they are likely to be under more pressure because they never had a very strong demand environment. At best, probably their revenues grew at about maybe 10 to 12%. And therefore, the impact of margin pressures will be more felt by them. Versus that, some of the tier 2, the mid-cap ones, the specialized players, I believe the demand environment for them, in fact, will get even better. Clearly, if global equity markets are going to be under pressure, if the US tech space is going to be under pressure, if indices like the NASDAQ are going to be under pressure, it's quite possible that we would probably see some softening or moderation in the valuations. Maybe it's not time to be in the generic IT services companies and be in the specialized mid-cap tier 2 IT services companies. That's where the opportunity is going to be from a multi-year horizon.
It's going to be a fantastic close, actually, to trade today. We have recovered close to around 270 points from the low point of the day, 280 points actually to be precise. Pretty good going out there. So before we wind down, Mitesh, I wanted your view on the close. Given that we're going to be closing above that 17,600 odd mark, do you believe we're good for more? And would you close out your positions if you had a long one?
No, Nigel, what we've done is we've taken part profits. Now again, because I believe this will be a contracting market, difficult to figure out the phases. But the first target which I had on the mind when I was looking to go long in the morning was around 17,635, 640, which is where the intraday averages are placed. So I think we're close to that. Makes sense taking something off the table, but yet hoping that this bounce back continues for tomorrow. I think the next key challenge will be that gap area which was created on Monday, which is between 17,690 to about 17,725. So I think around that level, I'll be aggressively taking off long position and then seeing how the market reacts to that.
Okay, Mitesh, thanks for that. Anand, of course, is still with us. Anand, any thoughts on a name like PVR, which fell sharply from 2,200 levels to 1,800 now?
Well, it's been a play of hope, basically. The assumption was that, movies is something people will always watch and they will therefore come flocking back as soon as the pandemic is over. And we've realized that that is not the case. There has been a behavioral shift and people are pretty happy with what they're getting on the OTT, and the movies are not making them come out and pay up the kind of money that the PVR wants. So I think there has to be a serious reconsideration of the value that you would get from a stock like that. Okay,
well, the market really is towards the end just surging. I mean, just look at the Nifty. It's now up 130 points. Big moves happening and a lot of stocks doing well. Anand, thanks a lot for joining us. Good talking to you as always. Let's start doing the recap of day's action. The averaging perhaps would bring down the Nifty's gains, but overall, the provisional close is above 17,600. A lot of stocks doing well. The sector of the day once again was in the automobile space. So Mahindra & Mahindra 4% higher, very close to 52-week high. Eicher Motors was at 52-week high. That did well. Aluminium and commodity stocks actually in general did well. So Hindalco, Tata Steel, Coal India, UPL were all higher. Titan did quite well, 3% higher on Titan. There's Cipla. There's a lot of banking names doing well. Kotak Mahindra Bank, ICICI Bank. So that's also helping. Bajaj Finance did well. Reliance was higher in trade. ONGC, Bharti Airtel, Maruti Suzuki, a lot of these individual names doing well. On the way down, IT, TCS, Infosys and HCL Tech, throw in a Tech Mahindra as well, were weak. Hindustan Unilever was a bit soft, and Divi's Labs also was a bit soft, but otherwise very strong sort of last hour for the market, Prashant.
Oh, very strong, most definitely. 125 on the Nifty, so 17,616 is where we finally leave. And clean 2:1 advanced decline, so actually 1,420 higher, 700 lower. Exactly 2:1. So RBL Bank was up strongly, 6% higher, 104. There's NMDC, which was up 6%, 119. IDFC First, 6%, 46. Chennai Petro, 8% higher. Varun Beverages started strong, end strong, 5.5 higher. Adani Transmission on big volumes, 6% on Adani Transmission today. There was MRPL, which was up 5%. Dawat, which is, I think, a rice brand, 8%, 8.5% higher, almost 100. Borosil Renewables, 7% in the green, 578. GE Shipping surged again, 6.5 higher on GE Shipping. Shanti Gears, 18%. It started 14 higher, it ends 18 higher. Indigo Paints about 5% higher. And of course, we discussed JK Tires, which ends up almost 9% in the green. And there are more volume-led gains that we saw today. Nigel.
Well, a few more stocks did pretty well. Borosil Renewables. Remember, there was a bit of a fear about that anti-dumping duty not being continued out there. The management joined us. They said that demand is still very, very strong, and maybe the street has taken it in its stride because the stock is up close to around 6.5%. Yesterday it ended with a cut-off around 2.5%, but a good recovery is what we've seen on that front. CMAC, we don't talk about the stock very often, but that one as well was up and about in trade today, so that stock ended higher. And Genus Power, in the last hour or so, volumes were massive. They've incorporated a subsidiary to look at smart metering. So Genus Power was another stock that did pretty well. From the paint stocks, Indigo Paints was, painting it only green today. Stock was up close to around 6%. And Suzlon, yet again, the stock was up close to around 5% in today's trading session. Was up close to around 10% yesterday. Let's see whether or not this time around there is something in terms of a turnaround or maybe some debt reduction or the likes. But the stock has been moving higher and moving higher on very, very large volumes. So to sum things up, the Nifty ends virtually at the high point of the day. The final tick was above that 17,600 odd mark. Mid-cap index as well, up close to around 1.4%. Nifty Bank, that was the one that was the big outperformer in trade today. It's curtains down on this edition of Closing Bell and the market. But up next, we'll place the spotlight on commodities that have pulled back from their recent peaks and headed towards another red-hot rally by the end of the year. That's the big question. We'll discuss that and more on our Tuesday special, Commodity Champions.